Hey guys, Dave again. Welcome back to the channel. So in this one, we're going to go over some questionable financial advice we saw a YouTuber give and why I don't think it's quite right and the timing is a little off. I'm going to break it down. Let's get into it now. Okay, so let's get into this. Two things I got to say first. One, this is absolutely not a takedown piece. Enjoy this guy's channel. He's closing in on 50,000 subscribers. He's got a great Australian accent. It tends to go a little doom and gloomy for me. Everything's always a crisis, which I think you just have to do on YouTube these days to get any traction, but whatever. Kudos to him. He's making it happen there. This piece of advice just seems a little outside the norm. And two, not financial advice. You'll lose all your money. I think that's what you're supposed to say. I definitely got yelled at for that once for not saying it, even though I had it in the description. Anyway, so I don't have a lot of time to watch YouTube. I usually watch the finance channels when I do. And I happened to click on this dude's video the other day. I think it was like Saturday. This was like 2 days ago. So in that video, he recommended commodities, getting involved in commodities, investing in commodities. So kudos to him. He didn't recommend doggy coin or crypto or any of these other overbought asset classes. But I think the timing of commodities is a little off. I think he's a little late to the party. And let me show you why. So if we come over here and we look at the dollar, so this is DXY, it tracks the dollar. We can see that the dollar has really fallen off since right around the end of March. So if we go back here, March 30th, the dollar's at 93.44. If we track over here to today, it just closed. We're down to 90.21. So what's that, like 5% and some change? Now with commodities, as the dollar drops, commodities rise because foreign currencies pegged to the dollar rise as the dollar drops. So in their world, commodities get cheaper, demand increases, so they buy more. So we'll see commodities rise as the dollar falls, which we're seeing. So now when you see on CNBC and Bloomberg and all these other guys are like, oh, commodity prices are going through the roof, always go look at the dollar and the dollar will tell you what's going on. So, and this is a great website that explains that inverse relationship that goes on between the dollar and commodities. And I'll link it down in the description so you guys can go down and read it yourself. And it'll help make sense of some of this. So if we go back over here to the chart, if we look, the MACD crossed here and we saw the dollar rise. We've seen the MACD cross. We see it falling again. And if we look at the RSI, basically it's telling us that the dollar's a little oversold. I suspect we're going to see it drop. We'll see it get a lot oversold. The MACD is starting to close in on each other. So I don't think it's going to be long. We're going to see the dollar turn. You know, we're starting to see a little glimmers of green here where it wants to go. I'd wait for a full candle close on the daily before I would go ahead and say that it's fully in. I'd also like to see the MACD return, cross and get back together, and then the RSI make a little bit of a turn and come up too before I fully call that the dollar is going to turn around. But right now things look like it won't be long and we're going to head in that direction. Probability is high that we're going to see the dollar start to rise sooner rather than later. So if we come over here to this website, this gives you the commodity ETFs by total assets. So this is the top like 25, and I'll link this down in the description as well. So if we look at the first two on our chart, because for trading commodities for your average person, ETFs are the easiest way to get into it. It's the most liquid. You can get in and out. It's easy and it's simple, and it's definitely the best way to go if you don't really want to get super involved. You can just kind of trade them like stocks, which makes it nice. So if we come over here, this is the largest commodity ETF in the world. It's the $5 trillion one that we just looked at over there, the PDBC. So we can see here, if we come down and we look at the RSI, it's overbought. Now the MACD hasn't crossed yet, so it may still climb a little bit. It's up a tiny bit after hours, but it was down today, so it's basically flat on the day. And we'll get into the reason why it might be up a little bit after hours, and it's not really the reason that you think. So even if we come over and we look at the second biggest commodity ETF, which is the DBC, also overbought, volumes dropping, which tells us something. So, and the MACD hasn't crossed yet. So if I were in it, I wouldn't get out. It's above the 200-day moving average. The MACD hasn't crossed, but it's overbought. So it's something you want to keep an eye on. How much more you're going to get out of this seems a little questionable to me. If you look at the run up and we come back and we tie it back to our dollar, you can see our semi-low here on March 30th, which was at 1663. We're now at 1886. So quite a little jump there. I don't know what that percentage is off the top of my head. And just to prove to you on the dollar, so if we come back to the PDBC and we look on March 30th, was at 1726. So we're up $2 and some change on this one, which is a considerable jump as well. I wouldn't go barreling into commodities right now. I would step carefully. If you're going to go into commodities, day trade these bad boys. Don't go in and try to hold for the long term. Now we're seeing a rise in, and I know there's going to be naysayers and counter pundits or whatever you want to call them here. So there's two commodities that are definitely rising. One is iron and the other one is copper. So let's get into why iron is going up. So this is from the South China Morning Post, which outlines iron. So China gets a lot of its iron from Australia. Now they're in a big spat, Australia and China, because Australia canceled a Belt and Road initiative. If you don't know what the Belt and Road is, go back and watch my video called Why the U.S. Gives So Much Money to Other Countries. It breaks down the Belt and Road initiative by China and how the U.S. is trying to counteract that. I'll link that at the end of the video so that you can get familiar with that. But Australia canceled this big project. They're also talking about canceling a 99-year lease contract that a Chinese company has for an Australian port. Classic Belt and Road Initiative maneuver. Talk about that in the video too. So China's mad at them for this. So they've slapped tariffs and halted some of the import of Australian iron ore, which has driven the price up because it's reduced supply. So that's why you're seeing iron go up. We're also seeing copper up, but this is more of an EV play. So copper mines hit all-time highs today. So again, I don't like getting in the market when things are at all-time highs, running up this surging demand. I think most of the easy gains have been already absorbed. Your hedge funds and your smart money got in early. Don't be dumb money. Don't be retail money, and don't get in late. Trying to help you guys out. That's what I try to do with this channel when we do finance pieces. Like, let's not follow the herd FOMO mentality. Let's try to get ahead on some of these things, and let's not get in after the smart money's already in and just give away money. So when it comes to commodities, I think the timing's off. I'm a little disappointed that he made this suggestion. I like that he stepped out and didn't, recommend the same stuff that all your other YouTube finance gurus are recommending. So kudos to him for trying there. We're going to look tomorrow, at least I hope tomorrow, unless I get sucked down some rabbit hole or whatnot. I think there's a couple opportunities in real estate. There's some underserved segments. So we'll try to get into those. That's my hope for tomorrow, unless some big news event cycle happens or whatever that we need to talk about. But yeah, so don't go rushing into commodities. If you're in the space, I don't think you have to get out right now, but watch your indicators, watch your MACD, watch your RSI, keep track of the volume. And, if they start to move or break on you, I would get out. I would take profits. I wouldn't be greedy here. I wouldn't hang long. Just be nimble and be ready to get out. You might get another couple percentage points. I don't think it's going to be huge. I don't think we're going to see some massive upswing. I think most of the bubbles are already pretty full, this being one of them. So if you'd gotten back in March, or maybe you did, kudos to you. Let me know down in the comments whether or not you got in March or not. But don't go barreling in now if you're following his advice. And I'll catch you guys in the next one.